You know what you're watching. DS Learning Finance. Whoa. This number one tip I'm about to share with you guys is going to save you tons of money. Yep, tons of it. And I'll just say these two words. Level 2. Nope, I'm not talking about taking level 2 up an escalator. No, I'm not talking about taking a lift from ground level to level 2. No, not that, guys. I'm talking about level 2 on a trading platform. If you know, you know. And the best way to explain what level 2 is by actually giving you guys this example. So I know we're talking about buying stocks, but you need to be able to find someone who's selling those stocks in order for you to buy it, right? Yeah, the answer is yeah. But let's talk about selling stocks. Let's pick JD Sports, for example. Completely random, even though it's a stock that I own. Completely random. So JD Sports stocks currently have a share price of £3.95. Cool. So let's say I wanted to sell 1,000 JD Sports stocks, and I decide to sell it at £3.90. DS Learning Finance decides to sell his 1,000 at £3.90 per share. That's all well and good, but when you put it on a larger scale, there could be 10 other DS Learning Finance. This is just strictly hypothetical. There's only one DS Learning Finance. There's only one. Okay, don't forget that, guys. So what you have here is DS Learning Finance selling his 1,000 stocks at £3.90. That's cool. But you also got Adam selling his 1,000 stocks at £3.85. And you also got Luke selling his stocks at £10. And even though that's definitely not going to get bought because that's way overpriced, you can see that the general market would be around here. You can still get investors like Luke that are just basically aiming for that sky and will probably come crashing down very badly. Cool. And then you also have Lisa that's being just an odd egg and is underperforming. So she's placed her share price, selling price at £2.50, and that's basically what happens on a much larger scale. So what I'm trying to say is, yes, you're looking to buy shares for whatever price you see that stock at, but there are thousands, hundreds of investors that are basically giving you the amount of stocks that you need, but at various prices. So the share price, the buying price you see those stocks at, isn't giving you the whole spread. It's not giving you the whole perspective of the prices that you can actually buy at. And that's a good thing, because it means that you can basically cut your margins finer. What level 2 allows you to do is see the whole spread of available prices that people are selling and buying shares at. So you can then place your orders accordingly. So what that means is you get to see these 4 people, but you get to see everyone else available for JD Sports stocks. And you can say you wanted to obviously buy 1,000 shares. You can see that, okay, cool, I've got these people available. What's the cheapest price I can sell these shares for? And obviously it's going to be £2.50. But just to put this into perspective, this is probably unrealistic, because what investor will cut their profits so short when the rest of the market is at this sort of price? So obviously this is unrealistic, but it could happen. Say you place a stop loss incorrectly, place the wrong stop loss, that could be easily met. But just to obviously ignore that, put a more realistic case scenario, these two prices would be the sort of range that you're working within. So let's say that we saw this on level 2. What we would then do is place order for this one, because obviously this is the cheapest realistic stocks we can buy. So this is basically giving you what level 2 does simply. Level 2 is normally offered with trading platforms. So when you invest via a trading platform. It's offered as a premium, so you tend to have to pay a bit more money. I personally don't have level 2. I know there'll be some of you guys thinking, oh, why are you talking about this if you don't have it? Well, it's true I don't have it, but at the same time, this is still occurring in the stock market. Every single time you make a trade, every even time you don't make a trade, every time it's occurring in the stock market. So you've got to put that into perspective. So whenever I buy shares, yes, I look at the current buying price. That's cool, but I never, ever meet that buying price. I always go a little bit under. So what I'll typically do is 95% under. So, sorry, 95% of that current selling price, depending on how big the spread is. That's my sort of rule of thumb, if you put it that way. So what I'll typically do is that I'll look at whatever that buying price is. So in this case, for JD Sports, it's £3.95, and then I'll times that by 0.95. So 95% of whatever that buying price is, that's the order I'm about to place to hopefully buy me some stocks. So if this case it's £3.95, I would end up placing an order for £3.75, 1,000 stocks worth of that. Cool. And then I would adjust myself accordingly. So I'll give it a few days. If it's not met, then obviously that's disappointing. But if that's the case, then I'll bump it up a bit. So I'll look at the current buying price. If that's, say it's £3.95 again for simplicity, it probably won't be because prices just go up and down. But say it's £3.95, what I'll do is I'll bump it up. So I might go to 97%. And whatever value that is, so 0.97 times £3.95, I'll place that 1,000 stocks for that order. Yeah, it doesn't just obviously have to be 1,000 stocks. It'd be how many other stocks you want to buy, 50 stocks, 100, whatever. I'll place it for that price. So I'll never actually meet the buying price. And that's because, as you can see, there are investors that are selling at the price that you want, but there are also investors selling at the price that are a little bit lower. And there are also investors selling at much higher prices. And there are investors, if you're lucky, that may sell dirt cheap. But you can't bank on those. So you always want to be a little bit under, because there's going to be such a wide spectrum of investors that are offering you their stocks, that are selling their stocks, and at different prices. So you guys really want to do this repeatedly, because it can begin to add up. You'll be surprised. This fine margin, spending hundreds of thousands, spending thousands, whatever, doing that repeatedly over time and with compound interest, guys, it can be a difference, trust me. So always make sure you go a little bit under than the buying price, or a little bit selling price that you see, because there are investors, tons of investors that are willing to buy and sell at those prices. And guess what? If no one meets those prices for you, then you can always adjust it accordingly again. You've always got that time. But once you make that transaction, once those stocks are bought, once those stocks are sold, you can never get that back again. There's a difference. Alright guys, I've left some links in terms of books that I've read down in the short description box below. Whoa. Yeah, check those out if you guys want to get some more knowledge on the investment world, well, stock market specifically. Check those out. I've given reviews about it, and yeah, just see what you like. It's your favorite YouTuber, guys, Dami Solari. I talk about stock market investments like this one. I talk about property investments, and I also talk about financial management too, giving you that consistent content. You know, before you guys can go about doing whatever you're going to do for the rest of the day, say it with me: like, subscribe, and share. DS Learning Finance. Whoa. Bye guys. Whoa. Ah!